When I first started investing, let's just say it didn't go as planned. I thought I knew what I was doing, but thousands of dollars of mistakes later, I quickly recognized I need to learn from these mistakes. And that's the goal of this video. I want to list my 5 biggest mistakes that I made early on so that you don't go through and lose money the same way that I did. And be sure to stick around until the end because number 5 is the one that I regret the most out of all of these. The first big mistake that I made was outsourcing my conviction. And what I mean by that is instead of trusting my own research and my own judgment, I outsourced my ideas to the internet, to friends, to people I thought they knew what they were talking about. And eventually you start running into the same stories in the same stocks, and you begin to believe that, well, if everybody's talking about this, everyone must be onto something. They tell you how it's the lowest the stock has ever been. It's going to explode really, really soon. And ultimately, what that led me to do was to buy the stock of Twitter. And most people may not recognize that they were public at one point before they got bought. But I bought Twitter and earnings came around and the stock got shattered. I was devastated. I was convinced that I had the right stock. And what did I do? I went ahead and doubled down on that. I doubled my position. And after that, the stock continued to tank. And many thousands of dollars later, I realized this is the last time I'm ever trusting a company that I don't actually understand. I never used Twitter and I didn't really know how it worked back then. And this was the number one rule that I took away. Never invest in companies that you do not understand. And this is one of my core guiding principles moving forward. And by the way, yes, that counts for advice that I give you. Never just go blindly based off anything that I say or anyone else says on YouTube or the internet. Do your research, understand the companies, and never buy a company that you don't really understand how they go about going into business. The next big mistake that I made was not understanding and choosing to invest in index funds. And most people, when they're starting off, are really confused by what an index fund is. And there's all kinds of different versions out there that you can buy, but there are several index funds that can cover either the largest companies in the market, like in the S&P 500, or they can cover the entire stock market itself. These are the type of investments that are way better for new investors versus picking individual stocks. I got caught up in headlines on figuring out what is the next big stock that's going to pop off. And what I didn't realize was often single individual stocks will underperform what the general market is doing overall. My portfolio started to lag because I was missing these key building blocks. And this is why I recommend moving forward that investors or anybody starting the foundation of your portfolio, it needs to start with index funds because that way your bases are covered and you know that you're going to be able to return at least what the market is doing or right around there. The third big mistake that I made was not passively investing. What I did when I first started off was I would have a lot of money ready to go. I would go in and buy some of the stocks that I wanted to pick from, and then the rest of my money would just sit in the sidelines in cash, earning nothing. And I thought I was being clever. I was going to take advantage of when these stocks would dip, and I would get even better prices and even better returns. Well, lo and behold, what happens is if the market continues to go up, all of the stocks I'm interested in continue to go up, and I regret not buying in the first place. And what happened over time is my portfolio started to lag because I was sitting in too much cash and not enough money working in the market. So the way around this is to set up passive investing. And this can be weekly, bi-weekly, monthly, whatever works for you. But the idea here is that you're consistently buying the stocks and index funds that you're wanting to own over a cadence, over a time. And this allows you to, one, not forget to buy and not to leave too much in cash, but two, to continue to build your position and take advantage of the market that generally trends up. This one is huge and will pay massively over long time periods. The next mistake that I made was getting too diversified and owning companies that I did not understand, but I felt like they were the right fix for me to be diversified. So let me explain. An example of this could be you need to own an oil stock, and you need to own a finance stock, and you need to own tech stocks, and you need to own banks. Whatever diversification that people tell you that you need, or whatever you feel like you need, I ended up buying companies that fell into each of those industries without really thinking about, do I believe in this industry? Do I believe in this company? Do I really want to put my money in things that I do not understand? And what happened is I ended up allocating a lot of the money that I would have preferred to have had in other stocks into stocks that I truly didn't believe in. And I felt like I was doing the right thing because I was quote unquote diversified. At the end of the day, the best way to do this and what I should have done in the beginning was buying those diversified index funds that I spoke about at the start. That's the easiest way to get diversified from there and make sure that I'm covering huge parts of the market rather than me trying to pick certain stocks within certain sectors. So I don't recommend doing this. Just handle it with the index funds and do research and pick stocks you believe in. Don't just pick random companies because you think that you need to do them for diversification. Now, the last mistake that I'm going to take you through, I truly feel passionate about, is the biggest mistake that I have made during my entire investing career. And this is a key one that you do not repeat. And the answer here is I made way too many trades of buying and selling. I should have just found companies that I believed in and held on to them for the long term. And if there's a company out there that you have heard of that has killed it over the past decade, I'm willing to bet I own them at some point within these last 12 years. Think Nvidia, Tesla, Google, Microsoft. I owned all of these companies at way lower levels and I sold after they would have good earnings. And what would happen is you get really excited. I'm learning how to invest. I finally picked a stock, it goes up, and I get scared that I need to lock in the gain while the stock is up without really realizing and listening to the earnings that they're telling me that this growth is not stopping anytime soon. And I would sell, and ultimately what would happen is I would start getting FOMO because the stock would continue to go up. And I would then chase and I would buy it at a higher price than I originally sold it at. And after doing this for a couple of years, I started adjusting my behavior and selecting companies that I truly believe in. And I've held most of those since then. And one of the big things that has helped me get through this is passively investing in these companies, knowing that they might have amazing earnings, they might have big time pullbacks, but if I'm buying a little bit over time, I'm continuing to build my investment both with my own money and watching that stock grow. Had I not sold some of those companies, I would love to know how different my life would be right now. So those are the 5 big mistakes that I made early in my investing career. And I hope you really listen to this video and don't repeat those costly mistakes where I lost thousands of dollars by making these. And remember, it's really important to do your own research, to passively invest, and to find those winning stocks and hold on to them and add on to them over time, because you will regret selling too much if you don't think on the long term. If you learned something today and enjoyed this video, please give it a like and be sure to subscribe to my channel so that you don't miss any of my future videos. And in the comments below, what's an investing story or a mistake that you made that you can share with the community to help other people? I would love to read your stories, and there's no better way to learn than through experience. Thanks for watching, and we'll see you in the next video.